वेलकम टू माय यूट्यूब चैनल टैक्स मीनिंग। दोस्तों आज हम डिस्कस करने जा रहे हैं विद होल्डिंग टैक्स ऑन पेमेंट्स टू नॉन रेसिडेंट। दोस्तों सेक्शन 195 ऑफ इनकम टैक्स एक्ट 1961 गवर्न्स द विद होल्डिंग टैक्स ऑन पेमेंट्स टू नॉन रेसिडेंट्स। दोस्तों आज के टॉपिक में हम सेक्शन 195 के सभी सबसेक्शंस को डिस्कस करेंगे। आइए सबसे पहले डिस्कस करते हैं सबसेक्शन 1। सबसेक्शन 1 क्या कहता है? सबसेक्शन 1 के अकॉर्डिंग एनी पर्सन रिस्पॉन्सिबल फॉर पेइंग टू अ नॉन रेसिडेंट इंक्लूडिंग फॉरेन कंपनी एनी इंटरेस्ट और एनी सम चार्जेबल टू टैक्स shall at the time of credit or payment thereof whichever is earlier deduct income tax at the rates in force. So there are certain exclusions from on certain nature of payment under this section, like salaries, dividend payable on which DDT is payable, interest to specified infrastructure debt funds which are liable to TDS under section 194 LB, interest payable by Indian company or business trust on specified borrowings under section 194 LC, interest on certain bonds or government securities. दोस्तों there are certain important terms in subsection 1. So अब हम उन important terms को डिस्कस करते हैं। सबसे पहला टर्म था any person। इस सेक्शन में any person includes a non-resident, and if a non-resident makes a payment to another non-resident, he shall be liable to deduct TDS if the sum is chargeable to tax in India. So the next important term is sum chargeable to tax in India. That is the sum chargeable. To decide whether a sum is chargeable, we have to go through various sections, like section 6 which decides the residential status, section 5 which decides the scope of total income, section 9 which decides whether an income is deemed to accrue or arise in India, section 90 is gives an option to assessee to opt for provisions of tax as per Income Tax Act and provisions as per DTAA. So we have to go through various sections to decide whether a sum is chargeable to tax in India. And the other term is rates in force. Rates in force means whether the rates as per Finance Act and rates as per DTAA. So to decide whether a sum is chargeable to tax in India, first we go to section 5. Section 5 defines income received or deemed to received in India is chargeable to tax in the hands of non-resident. Income accrues or arises or deemed to accrue or arises to him in India. So what is income deemed to accrue or arise in India? Section 9 decides what is income deemed to be accrue or arise in India. As per section 9, income is said to be deemed to accrue or arise in India if the same is accruing or arising directly or indirectly through a business connection in India, or from any property situated in India, from any asset or source of income in India, or transfer of capital asset in India. Also there are other clauses like fee for technical services and royalty, which are also income deemed to accrue or arise in India. So we have to also decide the residential status as per section 6. In case of companies, there was an amendment according to which an Indian company is resident in India and also a company having its place of effective management in that year in India. So what is the place of effective management, which is also called poem? So as per the poem means a place where the key management and commercial decisions that are necessary for the conduct of business of an entity as a whole are in substance made. So if a company is a foreign company and its main decisions are being taken in India, then it will be deemed as a resident in India. So poem are very important rules to keep in mind while deciding the residential status of a person. So next section we should read for deciding whether a sum is chargeable to tax in India is section 90. Section 90 permits an assessee to opt for income tax provisions or the provisions as per DTAA, whichever is beneficial to assessee. Further, we have to keep in mind that if a person is opting for DTAA, then he has to obtain a tax residency certificate from the government of his country, and also he has to file a form 10F. So if he has a tax residency certificate and furnish the form 10F, then he can opt the provisions as per DTAA if they are beneficial to him. So now if a sum is not chargeable to tax in India, then TDS is not liable to be deducted on that section. However, you have to furnish the information as per subsection 6 in form 15CA and or form 15CB if it is applicable. So now we move on to next subsection, subsection 2 and subsection 3. Friends, subsection 2 talks about application by the payer of the sum for low deduction or nil deduction of tax at source. So however, there is no specific format for making an application, but the application may be filed online. So if a payer thinks that the whole amount of income is not chargeable to tax, then he may make an application to the assessing officer. So the another section is subsection 3, which is the option available to payee of the sum, and he can apply for nil TDS certificate under this section. However, there are certain restrictions for assessees to make application under subsection 3. As per subsection 3, only branches of foreign banks and branches of foreign companies who are undertaking business or profession in India from continuously 5 years can make an application. Also, there are certain restrictions on type of nature of income under this section. So subsection now payee has also another option to make application for low deduction or nil deduction of tax at source under section 97. According to section 97, assessee can file a form 13 and make an application for low deduction or nil deduction of tax at source. This application can also be filed online through income tax filing through TDS portal. So the next subsection is subsection 4. Before going into another subsection, we need to discuss one more thing, that the order under section 195(2) is only a tentative order and does not have any effect beyond providing immunity under section 201. Further, it does not preclude the assessing officer to either re-examine the chargeability of income in regular assessment or in regular assessment proceedings, or to recover the taxes from the payer in his representative capacity. So अगर किसी ने application की है subsection 2 में, so the order is not the final in respect of the income tax collected from such sum, and the assessing officer जब assessment proceeding होगी तो उसमें different view भी ले सकता है. So next subsection है subsection 4. Subsection 4 कहता है कि जो subsection 195 के subsection 3 में आपने सर्टिफिकेट लिया है उसकी वैलिडिटी कब तक रहेगी. Subsection 5 के अकॉर्डिंग CBDT को पावर्स है रूल्स बनाने की इन रिस्पेक्ट ऑफ ग्रांट ऑफ सर्टिफिकेट. नाउ द subsection 6 is also an important subsection for regarding withholding taxes on payments to non-residents, as this section requires an assessee to furnish the information to department before making any remittance. So as per this section, whether a sum is chargeable or not chargeable to tax, assessee is required to file information with the department. So there are two forms for filing information under this section, 15CA and 15CB. 15CA is required to be filed by the assessee and 15CB is required to be obtained from the chartered accountant. So 15CB is required only in specific cases. However, 15CA is required to be filed in every case. there are various parts there are various parts in this form. Part A, if the sum is below 5 lakh and chargeable to tax in India, so part A is required. If part B is required to be filed, where the assessee has made application to assessing officer for lower deduction of tax at source or nil deduction of tax at source. Part C is required to be filed when a certificate is obtained from an auditor under section 50, under form 15 CB. And part D is required to be filed where the payment is not chargeable to tax in India. So all these are requirements to withhold a tax from the payments made to a non-resident, and I hope I have covered all the details regarding this section in very brief video. I hope you like my video. If you have any queries regarding this topic, you can contact me. Thank you for watching my video. Please continue watching my video and please subscribe to my YouTube channel Tax Money. Thank you.